So size of opportunity is large, but competition has intensified. Raamdeo Agrawal, Joint Managing Director and Co-founder of Motilal Oswal Financial Services joins us. Raamdeo, even though it's 3rd of Jan, it's never late to exchange pleasantries. Wish you and your team a wonderful 2014.
Yeah, and let me wish the viewers a very, very happy and very prosperous new year.
Raamdeo, 2013 has been a year of divergence and concentration. Nifty went up by only 6%. IT and pharma, they ruled Indian markets. In fact, quality ruled Indian markets. Do you think the same trend will roll over to 2014 as well?
Of course, there are a lot of things changing, and we are seeing some major value migrations kind of thing happening in politics. I think in last 25-30 years, first time I'm seeing kind of a complete breakdown of the conventional politics, and new one is coming up. Whether it will be good or bad, only time will tell. But people are very excited, and we are witnessing a change which is revolutionary, and I hope it is going to be orderly. But clearly, it's a new politics, and so I think 2014 being the year of political change. If it is good, then it will be good for the markets, and if it is bad, then of course it will market will stay where it is. But my sense is that we are witnessing one of the most dramatic shift in the political management of this country.
Surely, but how do you think, Raamdeo, the markets are going to react to the build-up in the drama from now up until May? And do you think it will be again a volatile ride, or do you think we will range in a narrow band with 6,400 as the top?
No, I think it will be quite interesting, and I think optimism will build as we go closer to the polling dates, because I think it will be very polarized voting, and we are going to see some interesting times. But more than that, I think what is happening is that whosoever wins or loses, one thing is very sure, that policy paralysis, no decisions, and I mean those kind of times are gone. Whosoever comes in, I think he has to be acting, and seem to be acting in a very transparent and non-corrupt manner. So I think we are going to see a lot of action in the policy making also, apart from the elections. So I would think the market will remain more on the positive side, and of course there will be ups and downs, but we'll see higher levels on the day of the next election result.
We like it or we don't like it, but there's an innate feeling in the market that BJP will come back, Narendra Modi will be the next Prime Minister. That's what markets are betting on. Now, the best case scenario is that Narendra Modi becomes the next PM. Do you think that may not nudge the market needle now, because markets are already pricing in that event?
You see, Nikunj, right now, whatever they can price at 16, 17 times, I don't think anything is priced, because what is going to be the outcome, and beyond that, what really happens, what kind of changes come in the policy making, how do they treat the businesses? Because what has happened is there is a complete breakdown in the relationship between government and the business at this juncture. So the new government hopefully will have a better understanding and importance of the businesses in the economy, and hope to business. And the better governance. So if that happens, politics changes, I think businesses will thrive. So at this juncture, say all the businesses related to infrastructure, all the businesses where government has anything to any say in the policy making, and the aggregate demand and the quality of government spending, I think everything is very, very questionable at this juncture. So I don't think everything is priced at this juncture. Let's see the quality of mandate, and let's see who leads this, and what is the economic thinking behind economic thinking in the new politically surcharged environment. Because even BJP under, say, Mr. Modi or whosoever, till about 2 months back it was one way, but I think now under new circumstances, I think they are going to behave far more aggressively and far more transparent, and they'll put up better candidates. I think one of the best things which is going to happen is all over we are going to see much better quality of candidates from all the parties. So I think that itself is going to be a game changer.
Raamdeo, when capitalists are talking about politics, that just tells you that 2014 is all about politics. I've never discussed politics openly with you. I've always discussed earnings and valuations, but our today's conversation is only centered around politics.
Okay, just want to mark a couple of stocks in the meantime, and while the market is somewhat easing out, we're down about almost 0.5% now. In fact, we dipped below the 6190 mark as well in trade. But just take a look at the way the CNX IT index has been panning out. While the broader markets too are easing off, you've got the CNX IT index which is just picking up more weight. We're holding up by about 0.6% on both these names. Infi and TCS, the two large cap IT names, they've been giving a strong price breakout as well. I don't know if Ashwini is still with us and whether we can go across to him. Okay, Ashwini, what have you made of the move in Infi and TCS?
Well, it's clear that Infosys is trading above yesterday's high, so that's some kind of strength. CNX IT is clearly in the positive, and on an intraday basis, the negativity is probably taken out. So the trade appears to be, short on Nifty or Bank Nifty and long on IT. So if anybody wants to go long on something, probably the IT space is showing initial signs of strength and is not declining. In fact, is rising even as the market goes down. So it should be clear that which sector is going to bounce back first. So that's where people should be watching. Otherwise, I don't think Nifty is holding on to 6200, so it's clearly weakening further.
Oh yes, pretty tentative even at 6200, and we have already dipped below that mark as we speak. IT holding out. Raamdeo, what is your sense? It seems like we're in for a roller coaster ride from now up until elections in May. Would it be safest to stick to defensives and therefore IT would be the top bet?
I mean, you don't decide investment policy or stock picking order just because there is an election after 5 months. No, I don't think I'm going to change anything because of that. But clearly, the short-term traders will have a terrific opportunity in in a lot of other things than only the defenses. So the politically sensitive or the government segment sensitive stocks will tend to outperform in the next 5-6 months, which have been the laggards in the last year. So, of course, the companies which are outstanding companies, which have growth, of course, IT is one of the segments where there is a tremendous growth ahead, and valuations are very reasonable. One of the best thing about IT is, even today, you can get Infosys about 18 times current year, you can get even TCS about 23-24 times, and TechM at about 13-14 times, 14.5 times, SLT at about 7-14-15 times. So I think you get very high quality, very large companies at reasonable prices and good growth. So IT should lead the pack. It's a very large and mother industry of India now. I mean, very, very profitable. So I won't be surprised if IT remains in the forefront.
What about pharma, Raamdeo? What is it that you like from that sector?
Yeah, pharma has two parts. One is the export-oriented companies like Sun Pharma and your Ciplas of the world and Glenmark and all. So that's one set of companies which are riding onto the Indian generic revolution all over the world. Second is the now the domestic pharma is also a very large opportunity, and there are quite a big reform in terms of pricing structure and things like that. Though in the short run it has been a little detrimental to the domestic producers, but my sense is after 1 or 2 quarters, in next 2-3 years they will have a much more freedom to price their products and market it aggressively. So I would think the entire pharma pack, particularly the large ones who have export as well as domestic operations, I think they will have very interesting times.
Raamdeo, optically, Nestle, Glaxo, HUL, they are looking expensive, but they have one thing in common, that even at these rich valuations, the MNC promoters are ready to increase their stake. So do you think some of these MNC consumer franchises have a long way to go? When I say long, 3, 4, 5 years?
Yeah, I think, see, one of the thing about MNCs buying out the domestic, their subsidiaries, is one of the reasons is their cost of money and their cash flow has been tremendous, in the sense that their cash flow has been very good and the cost of money is literally nothing out there. So when they buy at 35-40 PE with a 10-15% growth, it's a very
We've got him on a terrible terrible line. My sincere apologies. You should be back with us. Don't go anywhere because you certainly don't want to miss any part of Raamdeo Agrawal's conversation. We'll talk about autos and of course his favorite topic, what is happening to consumers. But for the moment, if I just scan through the top traded counters, you got Ashok Leyland, which is right up there, and then you got TTML. Raamdeo, my apologies, we lost you there. We got you on a terrible line today. Next time we'll invite you to our studio. But today, since we have you on the link, would you want to carry on with your thoughts?
Yeah, so I think what is the last thing we're talking? Yeah, about that MNC buying up. Yeah, so there are two things. One is the cost of money is very low. Second, they are buying forever. They are not buying for 1 or 2 years or 3 years. So they are not buying to resell. So if you want to buy it forever, for 10, 15, 20 years, I think still Glaxo or and Nestle and all these things will definitely give you anywhere between 15 to 20% return, which in next 1 or 2 years. But clearly on a 10-year basis, I won't be surprised if Nestle from current price also gives you about 18 to 20% return including dividends, which is very good for them, but may not be so good for short-term to medium-term investors in India.
Raamdeo, you've been a keen and avid watcher of the auto space. What's the sense that you are getting? Because the monthly sales data from most of these auto majors is not quite encouraging.
Yeah, so it's right now it's a challenging time for the entire economy. I mean, the job situation is very bad. The infrastructure is not building up. So what is happening is that whatever day-to-day consumption is on, that's the only thing which is on. So there is no growth impetus to the economy right now. And that comes from the investment cycle. And investment cycle is completely dead, whether it is because of the high cost of money or whether it is decision paralysis or lack of confidence of the capital markets, lack of confidence of the entrepreneurs. But all said and done, the investment in the economy is at a very low ebb. And that is what is going to be the thing changing if at all we get a good governance in Delhi. So
Okay, we will get to Raamdeo in just seconds from now and we'll sort out that link for you guys. Just revisit what the market is up to, and now it's a significant 0.5% cut that you're seeing for both the Sensex as well as the Nifty. More disappointing to see that the broader markets, which up until now were showing you some sort of resilience, they too have completely cooled off. So both the small as well as the mid-cap index are now sitting in the red. We just want to see what TCS is up to because that's the one which is climbing the charts. It's holding up by about 1.5%. Maruti, Infosys, Kotak Bank, Ranbaxy, DLF, HCL Technologies, HDFC Bank and Kotak Bank are all your winners in trade. Rest all other stocks, of course, in the red as we speak. From the broader markets, let's just see where strength is holding on, and clearly IT is emerging as a winner. So not just TCS from the frontliners, you've got Hexaware from the mid caps, which is holding up by about 2%. Oracle Software up 1.6%. Havells outside the IT space, that as well is up by a good 1.5%. Tata Power, Adani Enterprises are all in the red.
Right. Raamdeo, my apologies once again, just one of those days where telephone lines and the line connection is bad. Raamdeo, we were discussing politics. Now, the man of the moment is Arvind Kejriwal. Everyone is excited. But do you think the Aam Aadmi movement is coming at a cost? His economic policy are more oriented towards mass, free water, reduction in electricity charges. As a capitalist, would you agree with them, or do you think they will come at a cost?
No, I think I am very disappointed with the way power thing has been handled. So I only hope that it's the initial, political promises pressure. But they are very honest. They are very simple in their thinking, but very straight to the point. What is good for the Aam Aadmi, that's what they want to do.
But what is good for the Aam Aadmi may not be good for capital markets.
No, it will be good for the capital market. See, this is what exactly is the thing. I mean, if you want to have a 24/7 high quality power at reasonable price, I think one has to run away from these subsidies, and the entire value chain of power, whether it is a producer, whether it is a coal producer, whether it is a power producer, distributor, everybody must get a fair deal. Just government must somehow see to it that the people who use power, they pay for it. And without paying for it, you cannot dole out subsidies the way they have started with. And you see, one of the worst thing is, what they started in Delhi, it is just gone like a fire all over the country. So I think I mean, this will be havoc for the entire power sector. I only hope that it doesn't, I mean, we don't have another repeat of this in any other segment, because it is much easier to give the subsidy, but almost impossible to take it back. So I don't know how they'll handle. They're already running, the entire sector is already running with 65-70,000 crores of losses. With this 20-30% decline across the board, I don't know, we are going to end up another 20-25,000 crores. So,
But Raamdeo, the bigger point is AAP now challenging the Modi wave, and is that somewhat making the equity markets a little bit jittery, because that as well was a talking point yesterday? We seem to have snapped that line, so we'll let Raamdeo go on that note. Appreciate joining him on the show as always. Revisit what the market is up to.